Finance Bill 23 introduced in Parliament by the Honorable FM has an interesting provision. It deals with capital gains in respect of intangible asset or any other right of a similar nature. To take you back into history, we had a Supreme Court decision in the case of B.C. Srinivas Shetty, which provided a very fundamental principle with regard to taxation of capital gains. It said that in order to tax capital gains, you need to have cost of acquisition and cost of improvement which are deducted from the sale proceeds, and this is the code for taxation of capital gains. And unless the cost of acquisition or cost of improvement is determinable, capital gains code will fail. And therefore we had successive amendments over the last 20 years where section 55, there were amendments introduced in section 55 to provide that in respect of goodwill or right to carry on a manufacturing or any other business activity which are self-generated, where the cost of acquisition is either not there or because these are self-generated, these costs cannot be determined. Similarly, if there is no cost of improvement which can be determined, then in such cases the cost of a self-generated goodwill will be treated as nil, and so also the cost of improvement of any such asset would be treated as nil. But what was missing is that when they introduced successive clarifications with regard to various categories of assets, there was something or the other which was left out, and possibly now the entire circle has been turned on this entire provision by providing that any other intangible asset or any other right of a similar nature, the cost of acquisition will be nil and cost of improvement of such an asset also will be nil. And therefore, for the lack of determination of cost of acquisition of a self-generated intangible asset or any other right, or to determine the cost of improvement, if it's not possible, this will be considered as nil, and whatever is the sale proceeds, that will be liable for capital gains.